Thank you so much for stopping by my channel, 521 Investment Wealth Builders. Today, I'm going to cover my process for passive investing. Now, process is actions or events that is leading to my expected results and outcome. Now, the name of the online platform that I'm using is Fundrise. You may have heard that name, and this name may be completely new to you. The platform, as of December 2023, had over 2 million smart investors. This platform provides me with access to institutional quality alternative investment real estate and venture capital without being an accredited investor. Now, an accredited investor is an investor with special status under financial regulation laws. Now, you must be over 18 and have a permanent U.S. residency, a valid U.S. tax ID, and file taxes. And then you should be able to invest on this platform if you desire. The real estate fund invests in a diversified portfolio of private real estate assets that acquire, identify, and manage on our behalf. I started with $10 and I can add funds to my account at any time. I now will share with you a breakdown of my investment portfolio as of October 2024. And this is valid. This is a valid breakdown. The majority of my investment is real estate, 50.77% of the portfolio. Here are the asset types in the portfolio: built for rent, industrial, multifamily. The strategy is called value add, core plus, opportunistic. They define the typical return profile. Now, the return profile is how long it takes to cash flow, the income, and total return. The name of the fund is called Flagship Real Estate. I am currently down 3.8%, and I understand why. And I mentioned this on my last video, how interest rate affect property value. So this is a good time to keep investing because it's maybe already bottomed out. 43% of my portfolio is in venture, which is top tier private companies before they IPO, the initial public offering. They are AI companies. Do not be afraid of AI. Invest. Again, when you hear the word AI, don't allow fear to come in. Invest. Machine learning and data infrastructure. These are some of the companies. Again, they are AI companies, machine learning, and data infrastructure. Now, I want to say this real quick. We probably all heard of Amazon, and I just ordered some off Amazon the other day. But did you know, before Amazon became a public traded company, it was a private company, and it became a unicorn. Other words, it had over $1 billion valuation. And the people who made the money was not the ones when the company went public. It was the one who owned shares of that company while it was private. A word of wisdom. Now, the name of that fund is called the Innovation Fund, and it is up 2% in my portfolio. The next one is private credit. It is 6.99% of my portfolio. The asset types are home builder finance, preferred equity, real estate debt, and multifamily. The fund name is Income Real Estate Fund, and I'm up 1.3% on this fund in my portfolio. Now, this is how I earn returns on my investment, dividends, and I reinvest the dividends in their fundrise drip program, which is dividend reinvestment plan. Now, let me share some with you. You may have experienced someone leaving the water faucet on, and the water starts to drip, 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 drip. Now, this is exactly what I want in my portfolio. I want my dividends to drip, 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 drip. And you know why? Because as long as they drip and I don't cut them all, they're building compound growth. So I reinvest in their program because just like water drips, I want compound growth. And I have no desire to turn it off. And I'm going to give it time. Appreciation. An increase in the value of my investment. This portion, the estimate return of the net asset value of the shares I own, because I own shares in this company. I own shares in Fundrise shares. Now, the net asset value represents the estimate value of one share, and it is based on the underlying value of the assets owned within a fund. Now, appreciation is captured through adjustment to the net asset value of my shares. So, what's that saying? When I own shares and as the value of the asset go up, the value of my shares go up. That's the way it works. And it also works opposite. And if it goes down, the value of the shares I own. So it's critical for me to get as many shares as I can. Again, it is critical for me to own as many shares as I can afford to invest in this platform. Because the more shares that I have, the more value of my appreciation as it goes up, the value of it, the more money I'm going to make. Again, the more money I'm going to make. Now, think about this, and you might have heard of this. It says, a biblical scripture, if I sow sparingly, I reap sparingly. If I sow bountifully, I reap bountifully. So, it's critical for me to invest more or sow more, own more shares, and then I have more increase as the value of what I owe increase. If I have little, I can expect little. But if I have more and it work in my favor, I'm going to have more value in my portfolio. Now, this is one of my investment for passive income. And I have another, and I'm not going to share that with you on this video. And yours may be completely different from mine, and that's okay. But as I always say, get into the financial game and do not be left behind. Now, Fundrise has an invitation program. And if you are interested, send me your email in the comment and I'll forward that email to fundrise. Again, this is your choice to do it. As long as you get in the game. That's the point of this video. Get in the game. Learn how the game is played. Don't be a spectator on the sideline. Again, it only costs $10. And there are many platforms out there online. But let me share some with you guys. Don't pay for nothing. Again, because a lot of times, I look at a lot of those platforms, they're boot camps. A lot of that stuff is $199, $299, $399 to get into their game. And I'm not against that. They're mastermind, because I'm going to start a mastermind. But guys, do your due diligence. Do your due diligence. Even with fundrise, do your due diligence, but get into the game. Again, get into the game. Don't allow fear to make you become a spectator your whole life. Then you look back, I'll look back 5, 10 years down the road and say what I would have, should have done. Again, I started with $10. Again, I started with $10 in December of 2022. And I have to give it time. So this is a 5-year investment for me. 5 years. And I'll see where I'm at in 5 years. Please subscribe, share this video, and if you're interested in fundrise, send me your email and I'll forward it to fundrise. Until we meet again, peace.